The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, we're back. Basil Chapman. Oops, we're not back. We're back if you were listening to me to Steve's show just a moment ago. Otherwise, welcome. This is the Tiger Technicians Hour. My pleasure to be here Monday through Friday and 11 o'clock till noon, 877-927-6648. Love to take your calls. And we're looking at the E-minis now up 450, having gone up and then down and then up. And now above the 9-period exponential moving average. And that's very important for it to stay there. Most importantly, you're looking at the 120-minute chart, which bounced right off that 200-period exponential moving average right there. That is also good. A couple of things that I need to look at now, and we'll do them as we run through the numbers. INDU. The Dow is up 53, having been down about 50-something points and holding that moving average right there. I believe that's the, let me just give you the exact, the 50, yep, the 50. Right there, holding the 50 period now over the 9-period exponential moving average, but really struggling in this inside track repellent zone. It's got to really pierce it. It's got to close into the 18,050 area to really show that it's got the temerity, it's got the strength to challenge the recent high. It was the high made yesterday and today of 18,109. It's got a peak, a C at 18,045, 18,046 stars leg D. Will it do it? This is going to be a really interesting couple of hours here because that's a long way to go when the technicals are not showing such great support. Now I'm going to move the 120-minute chart away and let's go on. And we're going to look at the S&P, the SPX.X. S&P 500 is at 2102.62, up 533. A little bit better pattern. It is above the resistance inside track, Japan wave inside track repellent zone, and that's a good sign so far. Will it make a peak C1, C2, and then a C3 by failing to go above 2114.46? The high of a couple of weeks ago, it's going to be the big question. Okay. But in the meantime, those are the parameters that we're looking at. At 2102, you've got the whole area of 2110 to 2111 as 2112, I would say, as resistance. Most importantly, 20.95, the 9-period moving average it hit earlier today, closes under that. That's very negative. Closing above that, and I'll say, hey, that's good action. The composite index is up 6, but let's just go to the QQQ because most people look at the Qs. Candle has been improving over the day. It's at 108.30. It too has got this inside track resistance area. It needs to clear 108.60, and then it has a chance to tackle the 109.07 high of the 20th of March. Now the support, after earlier, the support is higher. The support's at 107.90 on the day. And the 120-minute chart, I never finished that. Remember, what's the objective? You want to get to a D, and this is A, B, could be a C. You know what? I'm going to come back and do that live in a little while. Let me just put down here Q's live. Q's live. Okay. So New York Stock Exchange, NYA.X. A frog in the throat there. Holding quite well above the 9-period moving average. Wasn't doing that about 40 minutes ago, but now it is. And look at the 120-minute chart. It held that support. I drew that in earlier, and there it is, holding it. So we're going to be looking at this real closely right up until to the end of my show, because it's very important to see that I've spoken a little earlier about the residual strength that I was looking at, why there were specific points of I wanted to go short only at certain levels. Today, that's based on the indices. Certain levels had to be hit to be able to go into the short ETFs. And even then, I've got fairly tight stops because there is just enough residual strength to say we might not be done quite at this particular moment, and that is to the upside. So now we're going to go to gold. Gold earlier was down about 16. Now it's down, 16. Not a good pattern. It's that H pattern that I'm always a little concerned about, both in the daily, the weekly, and it did that in the 120-minute chart. Let me show you something. The objective in the Chapman wave is to get you to a leg D. What does that mean? From the lowest, most identifiable low bar, you merely want to count each successively higher peak. And as you move up, you count the with uppercase letters on the way up. Whoops. Excuse me. I have a special button that I could have pushed, but there's a new headset, and I didn't know where the button was. Sorry about that. Peak A, peak B, peak C, and peak D. 4 peaks higher, and then you've got to be a little bit careful. Well, lo and behold, let me move this away. Look at this chart. It went to a peak D, pulls back, has a special single move up, goes to an E, fails. Now it started something different. It starts another leg A, peak A. Leg B, peak B. Leg C, peak C. Leg D, underneath in an arch formation, and that arch formation breaks down. Look what we've got, a plunge to the downside. These are potent, and if it fails at a C, you can go all the way back to retest the low, and that's exactly what happened in the weekly. So this is gold itself. The GLD has a slightly different pattern. You see, it didn't even make that rally to the upside. This is very strange. I can't count this any other way than at a B minus failure in the 120-minute chart. That's just the way it is. It very seldom it happens. But there's that cup formation, the arch formation that I'm talking about. This is potent. When you get, I drew this in ages ago. Look, the lowercase h that goes to a lowercase m pattern. Look what's happened in gold, making lower highs, lower lows, lower highs, lower lows. Why? Well, because commodities are in a bear market. Even the yields are in a bear market. There could be a bounce, certainly, but the major tide appears to be to see yields going down and the commodities going down. We saw that in crude oil. Crude could have a little bit of a bounce. And we will do bonds, Terry, right now. So we've got the gold. I want to now go to the TLT and show you something very interesting. There's that H pattern that went to a lowercase m, and now we're breaking down. What I say to subscribers, watch out, 129. If that goes, that whole 128 area is going to be really important support. And look what's happened in the weekly chart. You've got that lowercase h pattern. So I'm watching the TLT very closely. I'm watching bonds very closely. Why? Because a lot of things are going on here. There are a lot of aspects. This is like a very complicated chess set. And within that context, I said that yields should remain within a trading band, that we could, in fact, have a little bit of a pop-up in yields, but basically the Fed was sort of trapped, and that even though yields could rally shorter term, the major tide seems to be that the major tide seems to indicate that the Japanization of our bond yields is here, and it's something that, and it's been for a long time, and that we should be going lower in yields. So this is the pattern that I'm looking at. There's a C that's a possible failure pattern right here in the daily, but it was a peak F in the weekly, and we got to watch bonds real closely, because if, in fact, it goes all the way down from 161 and 27/30 seconds to the 200-period exponential moving average of 158, that's a lot. That's 3 points to go. It would give back all the gains that were made in March, most of the gains, I should say. So I'm going to be watching that closely. Now I wanted to go to the dollar right here, DXY dollar index. And the dollar index is just holding quite nicely. There's that cup formation I showed yesterday. There's the second cup formation. Fascinating how it's also just stuck in a range. That means the euro is on the same thing there. Instead of this, the W formation, it's got the M formation. Yep, there it is. So there it is. We've got a very interesting scenario, and it says that looking at the commodities, crude oil longer term should make lower lows and lower highs, but on a very short-term basis, we're watching to see that if the continuous contract at 56.93 is able to get anywhere into the 57.60s, it should retest the previous high and make that leg D at 58.83 or higher. And it should do that within about a week or so. So now I want to do a question of the day. When I look at MA, which is MasterCard, wow. Leg D peak 93 round number high in February, 92.95 highs, a two-bar reversal, but all of a sudden we're challenging that. So this is going to go to a leg D maybe. There it is. We're going to go to a leg D in the weekly. All it needs to do is to go above 1 penny above 93, and it's at 92.09 right now. And whatever, bonds rallying, bonds falling, yields rallying, that's helping because the credit card companies or anyone involved with some kind of credit is going to benefit between the rising yields. Okay, so yeah, maybe a weekly chart. Let's look at Visa. Visa, look at that move in Visa. What a spike. This is only a single leg A up. That could fail, but we're going to watch it closely. It's in leg E in the weekly. And let's see, that's a capital E. Leg E in the weekly. And the, I have to redo it yet again. It got a split. All right, I don't know what that is. It's either an A, B, C, or it's something. I'll do that at some point. But Visa, I haven't renotated because of the split. I didn't lose the letters; they're all there. It's just that when you split, it goes down and it starts afresh, like a fresh page almost. Okay, so it's acting spectacularly. Visa is up 3.93, up 6% at 69.28, and MasterCard, I didn't even say, is up 4.14 at 91.90, up 4.69%. Has to have something to do with rates. Okay, so now I've done that. I wanted to quickly look at the IYT. Wow, a little bit of a rally here. Leg A, leg B, gray A, gray B. And there's that the double cup formation in the weekly chart says, yep, there could be a little bit more of a rally. That's the reason why I was saying that I'm not, how can I put it? I am impressed at these flurries of activity, even if it's very select, that allow the indices to go higher. But I'm not seeing broad participation. There was, and now there's not. It's very selective. And the other thing that I believe is quite important is that there's been a rotation. Look at this. Crude oil has pulled back very sharply, had a bit of a counter-trend rally, but take something like FSLR. We don't have a position in this. I almost want to get a position in it because it's something I don't necessarily like per se, but First Solar Inc. is trading at 63.65, up 53 cents, and it's made a leg D in the daily, but just a leg C in the weekly. And it's a very interesting pattern. We had one shorted just very briefly, but
if you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the fact, if the Future Economies currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's up 39. S&P's up 3.94. I was looking at First Solar, and it's at 63.54, 43 cents. It's acting very well, considering that it is in an area. You see, I know that it had traded like oil before, with oil, but actually, when I look at it as a business model, as long as most of these guys are starting to get the cities and towns to be part of their plan, it's a different construct altogether. If it was purely on their own ingenuity, etc., I would be shorting these things all over the show. But when I get these young people that they sent out, Solar City, I think it was, here in Newton, Massachusetts, out of the blue about a year ago, I get a ring of the bell, the doorbell goes, and it's two young people, and they have, in fact, all the information from Solar City, and they say the city of Newton has requested us to go around to the different houses to ask if you'd be interested. And if you are, then through the city of Newton, we will come in and do a study of what the benefits would be to go solar. And I'm saying to myself, hey, you got a city behind you? You can go to every single door, just the percentages right there to your benefit. It's got nothing to do with crude oil. It has to do with people wanting to do good, do the right thing. So I see it a little differently since then, but I have not. There was a period we did short, but we also wanted to go long. And I'm looking at this and say, hey, that 200-period exponential moving average is 6170 with a very quick peak A to B to C is going to be very important. Where 59.53 is the 9-period moving average support in the weekly, and 61.70 is the 200-period moving average, and it's at 63.60, 2-point differences on the way up. So you've got quite a bit of support there. I'm going to be watching it a little bit more closer. Now, a couple of questions I had. One is, am I going to remember that? What was the question? The question was, give me 1 second here. Just check it out. Oh, yes. Okay. So what happened is I just got an email and it says Visa and MasterCard, China opened their market to Visa and MasterCard. Okay, thank you, Gringo. That's great information. Okay, now let's do this. We've got whoa, that was a big move. I wanted to just quickly before I even do that, we've got Jerry in the Back Bay. Jerry, how are you?
Good. How are you?
I'm well.
The Visa and MasterCard thing, it's China announced it's going to allow foreigners to come into their market in June, and people expected it next year. So this is like an extraneous event that people knew was coming, but it's moved up, and you get a spike.
It's a big spike.
But it's a help, I mean,
yes.
It's a $4 trillion market. I mean, it's not bad.
Unbelievable. This is, how things are opening up in this world economy. And it's just, and if you go back to the 1920s, you'll see almost the same thing happened at that particular time. People think, now they say, we are so interrelated. Hey, you were really interrelated back in the 20s as well. I was speaking to Andy Hector about France had the gold. America owed France money, but they wanted to use leverage from the United Kingdom. It was a very complicated thing. So when the markets came down, it really impacted all the markets except the French, because the French had the gold. So I'm looking at this and I'm saying to myself, we are interrelated just like then, but maybe in a quicker format because we've got the internet. But the interrelationship is the same. General Motors bought a huge company, I think it was in Belgium, just before in 1929. I mean,
is that right?
Huge,
wow.
Yeah, it was to be able to build their cars. So there was an equipment maker, and they bought the factory. Things don't change. So we're looking at this, and I'm saying, well, wow, the interrelationship is going to become even more
very interesting.
Walking a tightrope. So Jerry, you wanted to look at
Royal Caribbean, RCL. Yeah, I'm thinking oil is going to roll over in the next week or two and go down about 15 or 20%. And Royal Caribbean has had a correction, so I'm looking for, if this is a good entry point for a 2 or 3 month type thing.
So let me just do this.
More of a trader for fundamentals.
We've got a break coming up, and I'm going to show you something from the Sydney Herald. It's the Sydney Morning Herald. And I'm going to show you something very interesting as soon as we get back. We'll be back, folks, with Jerry in the Back Bay on a most magnificent day here in the Boston area. And the Dow's up 34, S&P's up 4. Basil Chapman, Target Technicians Hour. We'll be right.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Well, I found it earlier on. My brother had sent me this email. He sent it last night, which was this morning there, saying we're being pummeled by an incredible storm, floods all over. I had to get out the back door instead of the front door. And then he said, go check out the Sydney Morning Herald, which I did. And it had this cruise ship. I know that when my wife and I were in Sydney in October, we were looking at in the harbour. It's a beautiful harbour with the Sydney Opera House and all. Anyway, this huge, I'm not sure if it's the Royal Caribbean or whether it's the CCL, which is Carnival Cruise. This huge ship comes in every few days, and with about 4,000 people. Anyway, they were pummeled for 2 days. They couldn't come ashore. They had these huge 11-meter or something waves pounding the boat. So I'm looking at this, and then when I suddenly see that you wanted to talk about RCL, which is Royal Caribbean Cruises, I thought, whoa, isn't that interesting? So you would be looking to play this as essentially an oil counter-trend oil rally, that it would benefit and that it should rally. But, it did gap down very sharply.
No, there was a news announcement. They cut the earnings estimate, but in my mind, all the reasons were temporary, and its earnings are going to kick back in, so I think it's going to grab hold and turn up, and then it'll be helped when the price of oil goes down 10 or 20%.
I don't think that I can actually disagree with you, but what I would say is this, that within the context of, if I'm correct about talking about the possible mini recession underway over the last month, maybe 5 weeks, based on stuff that I look at Royal Caribbean makes a high back in January, the week of it's 85.56, January, the week of the 23rd, pulls back, and now it's making that pattern that looks very much like an A to B equals C to D to the downside. It's holding at the 71.56 level. It was almost hit. It went to 71.64. So this is the area. The 200-period exponential moving average is the area. So this is what I'm going to suggest to you. I don't want to interfere at all with your idea that you could get a pretty good 3 to 6 week rally in Royal Caribbean cruises. But I would also like to add, I'm a little concerned because I've got a potential peak F in the monthly, an unusual G in the weekly, and a G in the a right arm extension G on the 2nd of April in the daily. And look, they did exactly what you would expect after G's very sharp pullback. So I'm going to suggest to you, have a little patience. Royal Caribbean Cruise is trading at 73.40, down 0.51 right now. I would see how it tests between 71.56 to 71, what is that, 71.30 area is the 200-period exponential moving average support, and then the 200-period simple moving average. I would just let it have a little patience, and then if crude oil, and you will know if crude oil is about to turn down sharply, because the barrier of this whole area in the continuous contract in the 58s, if it can't get through that in the next, I would even give it just no more than by Monday. If by Monday crude oil is not pushing higher, but in fact is breaking down below the 55, closing in the 54.70 area, I think you're absolutely right that crude oil is pretty much done with this move, and that it's just stuck in this trading range and it should start heading down. So that would be the clue.
I don't think it goes to the old lows, but I think it retraces to, back to 50.49 or 49.
51 to 49, somewhere there. Correct. That's exactly what I'm looking at. The previous low was 47.65, probably a little bit above that. Probably this candle that we're looking at right here, which is the candle of the 1st of April at 48.45. If it's going to do that, that's probably going to be good support. But yeah, so I have a little bit of patience. Now let me just see. Would you choose Carnival Cruise or Royal Caribbean? Do you have a preference? Because our CCL is acting a little bit better, even though they also, that's actually a G. Let me put that in here.
Yeah, no, I think I'll check into that. Yeah, that's good.
So you know what idea. I'm going to give you just something here, and that says that the pattern forming on Carnival Cruise is at least a little bit better than Royal Caribbean, as number one. Number two is you've got at least a few days. How about early next week? Give me a call. Let's look at it together.
That's a good idea. All right. Thank you very much.
Thank you very much. Always appreciate your call. Thanks, Jerry in the Back Bay. Now, let's do a couple of things here, folks. What I wanted to say is the VIX index. I want to go back and spend a little time on the VIX index. It is remarkable that under all these conditions, I think what's happened is that fund managers have become, and especially hedge fund managers, have become inured to markets going down. It just doesn't look like markets can go down, because every time there's a momentary pause, buying comes in, and the IBB, the biotech, suddenly find a bid, and you get a big move to the upside. And then even if it's a big move and then it stalls, it's still, the market is still up near the highs, closer to the highs. So, and as this rotational correction is concerned, you saw stocks like Visa give really poor readings. A peak D in the day, in the weekly, I don't have the updated. I don't want to just do something arbitrary. 48.71, 48.80. Okay, so that could be A, B. At best, it's a leg C in the monthly. But that daily chart had gone peak A, B, C, D, and E. There it is. E, and it pulls back really sharply. It takes time more than price, but it's a pretty big move. And a MasterCard had done the same, and then out of the blue, I even put the up arrow in. I had an up arrow in before. I forgot to see that. Usually I put a plus sign. All right, well, I should have heeded that. And now what you've done is you've got a move that is trying to retest the highs back to the 92, that round number 93 area. The high today is already 92. What did I say it was? High was 92.43 so far today. These sudden spirals to the upside, it's amazing. Yahoo comes out yesterday and, all right, so it's down. I was going to say at one point it went up. I was going to say it didn't sound very good at all, and then the stock was up. But I'm looking at this, and now the monster moves to the upside, like a Yahoo that's gone from the 20s all the way to the 50s, back down now to the 44 area. CMG, which made a peak D. Remember, what did I just say? We've been talking about this. I've got a webinar coming up in a week, less than a week, Tuesday the 28th. It's for subscribers, but you can get it if you sign up. You can get my newsletter for a month free, and with that you'll be able to get my 2 webinars, 45-minute webinars coming up Tuesday the 28th of April and the 5th of May, Tuesday the 5th of May. Now look at this. You identify the lowest low, and at least what you expect is an A to a B to a C to a D. This has got nothing to do with A to B equals C to D. That's like a lightning rod pattern. This is different. This is higher peaks, uppercase letters, lower troughs, and you expect a D. You can go to E, F, and G, but D is what you expect. Well, lo and behold, look what happened. Twice CMG went to a D. It went to 692.43 back on the 23rd of March. Not plummets. It drops quite sharply down to the 200-period exponential moving average at 644.06. Then it rallies A, B, C, D. Yesterday makes leg D. Bad earnings or disappointing earnings, plummets down 47 points to the low today was even lower. The low today was 635. So there it is. And I even had circled yesterday when I was talking about this before the earnings came out. I said there's a pattern here. So one of my favorite patterns, but I always respect it as a pattern. It's called the Head and Shoulders. We have Rick from British Columbia who used to always call in about the Head and Shoulders pattern. And this is it. On the left side, you've got in June, July, August. Was that August? Yeah, August, the week of the 22nd, it goes to 697.93, opens at round number 681. That's a heads up right there that something's going on. Pulls back quite sharply to the 607 level back in, that was October. And then it rallies and it goes all the way to a high, the week of January the 1st in the weekly chart of 727.97, the old Boeing 727 right there, 97, and that makes the head. So left shoulder, the head at 727.79, pulls back, and I had said there's a possibility it's making a right shoulder, even typed in right shoulder, RS, right there. And then lo and behold, there's a chance that you've now made a right shoulder. And the big thing I said was this low here. I didn't want to go to the low here. That's a little bit of an aberration in the Head and Shoulders pattern. But I did want to go to the low of 632.43, made the week of the 19th of December. If that is taken out, you're looking at a hat trick top possible in Chipotle, Mexican Grill, trading at 646 down 45, because it's the same thing. What I said is I see the same pattern of weakness showing up in the monthly chart, and that would say that any close was 646 of the 9-period moving average in the monthly chart. So in April, any close below would be a negative. But most importantly, if it takes out that low of 632, all of a sudden you've got yourself the chance that you've made a daily peak, a weekly peak, and then a monthly peak of significance that's time and price, and says Chipotle will not be back in the 700s for quite a while. That's really what it's saying. All right. So that's an analysis. Now, these are the kinds of things I'm going to be doing in my webinar. webinars showing up right here, 2 free webinars. Join Basil Chapman for these 2 educational and entertaining trading webinars. April the 28th, Essentials of the Chapman Wave, and then May the 5th, the 1929 Market Revisited. Why I want to revisit it? Am I anticipating a huge depression coming up? No, what I'm saying is we're going through a period of excessivity. This period of excessivity says it affects every area. The areas that I spoke about 2 years ago and then a year ago, and I said you'll see that we go from the Renaissance to the Romantic to the Impressionist, and you will then see modern art and modern music, but especially modern art and modern architecture in this phase now. It's the experimental phase. It's the phase that says we are prepared to, we have so much money, the we being those people that have so much money, that we are prepared to buy anything that has a sexiness to it, anything that has a cachet, anything that appeals to us, even if we just happen to like it. It doesn't even have to represent anything. But if it takes our fancy, we'll pay whatever it is. It doesn't even matter. When I'm paying 10 or 15 million for a house, I can spend anything I want on art. That's the attitude. We're going back into that same period, and there's a penalty to be paid for it. Is it now? Is it later? I don't know about that. I don't know the exact timing. I have ideas, and I'll present them even more with more cohesion this time, because we've now got the 3 months, almost 3 month period of a consolidation taking place without making new all-time highs. It's going to be really interesting, and that's what I'll be discussing. I'll talk about chart patterns as well as a follow-up to the Tuesday, the 28th. And now that you understand a little bit more, I will introduce it into the chart formations that we're looking at, that I will have ready to go. And it's going to be very interesting. There's a pattern here. Oh, I can't pull it up now. No, I'm not going to pull it up now. It'll make things a little complicated. So what's very important about this particular period, especially being April, is that when I'm looking at something like the dollar GB, great. This is the UK market. Look at the time lapse going right into April before the last correction, which came about from May. Oh, you remember the song Frank Sinatra sang so well? Riding high in April, shut down in May. That's life. Well, we're riding high in April, and we're going to see, is this chart going to be shut down in May? This is the Dow Jones UK. See, that was that touch of humor. Now, right there, look, right here. It says, right here. Oh, no, it wasn't there. It was right here. It says, join Basil Chapman for these 2 educational and entertaining trading webinars. Okay, let's get back to reality here. All right. So this is April. This is an exact time match right there. And exactly April. I don't know how many months it is, but 1, 2, 3, 4, 5, 6, 7. It's about almost 8 years. And it's the same thing going on right now. From the high of May of 2011. So this is 2015. That's 4 years. Oh, that's right. 4 years from the low. So, all right. This is going to be a fascinating period. Very important period. Now, I want to go back. I said I'd talk about the VIX index. Yep, we've got one break coming up. I'm going to spend that break on the VIX index, if you don't mind. And look at that. Down in the 12.90 area, down 35 cents. They're still buying of this market. That's the way I read it. I'll be right back. Basil Chapman, Target Technicians Hour, Dow's up 40.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
LYB here. What did it say? John wants to know, LYB, is it a short? LYB is Lyondell Basel Industrials, a Dutch company. Oh boy. So this is ABC in the weekly, and it looks quite strong actually. And then it's A, B, oops, let me do that again. A, why is it doing that? Caps. Okay, A, B, C, D, a possible E right here. I'm going to just say no. LYB trading at 96.92, up 37. The MACD's at 92, and the MACD is very strong. Stochastics at 92 in the daily, 89% in the weekly, and the MACD is still strong. Monthly chart, I'd say that's the one to watch. Absolutely. I'm going to suggest 2 things. One is hold off. I think you got the right idea, but I think you're a little bit early. You might be a little bit early. What I would suggest is You wait for a pullback, and if the pullback goes under 94, 95, the 9-period moving average, if there's another little bit of a bounce and it stalls at 96 in 2-3 days' time, it's pulled back and it had another little rally, then I would suggest, okay, now you can have at least a small position short with a stop just above whatever the high is, and that's the only way I'd play. But I'm going to make that's the first suggestion. The other suggestion is have a little patience, because if the weekly continues to strengthen, I think they're in chemicals or something lying down. I just don't remember offhand. Today's Wednesday. Call me Friday, or email me Friday, John. Let's look at it again. I need to have these 2 days to see if there's a peak made here. I'm looking for round numbers. I'm looking at all sorts of things. So far, it's not a short. It's acting well. It's only a short if you're thinking it's letter E, then it could pull back. But remember, you can have the recycle, because if it recycles, that E could be E/B, and it could go to a C and a D again quite easily. So hold off. Let's look at it again in another couple of days. Okay, now let's just do this again. The VIX index, because this is very important to me. One of the reasons why we keep seeing these volleys that keep on pushing the ball back in the other court is because that volatility index refuses to hold over the 9-period moving average. It refuses to go to 1382 to 1420. So we've got until Friday afternoon to see what the weekly is like. But so far, this is weakness in the VIX index. It's suggesting buying pressure is being maintained. And as long as there's buying pressure, even if it's select, I would say just be a little careful. I still see enough residual strength to have a couple of bounce attempts in this April period. So hold off on anything like that short. But the VIX index is really important. If by the end of the day, the VIX suddenly rallies back again, which it seems to be doing every day, wiggling around towards the end of the day, if it wiggles to the upside this time above 1325 to 1335, that'll say, okay, we're starting to build some kind of a base in the 1250s in the VIX index. But so far, all I can say is that our short positions have to have very tight stops, and they need to work immediately and on a very short-term basis. You've had some fantastic trades on some of the shorts, but they don't last all that. Not all of them last. Some of them do last, but a lot of them just very quickly revert back to a bounce. And this is the same thing that's happening in the VIX. So I just wanted to mention that. And if you're looking at the VIX 120-minute chart, you can see it's creating these arches. It's trying to make a base. If it does make 1250 as a base, 1260, 1250, you will see a sudden pop by Friday as the market weakens, and that'll be the first clue to say, okay, now we're finally starting to see fund managers buying insurance with the VIX, and that's going to be very important. At this particular time, you've got to look at this and say, hey, a little bit of strength there. So, okay, thanks for being here, folks. Today's Wednesday. Yep, I'll be back tomorrow. Don't forget, check the front page of TFNN. Look for those. You got the webinar. You got Steve Rose is giving 2 webinars, and I'm going to do 240.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.